Hope everyone's having a great day. This is Jay from J&D's Retirement Journey. Please hit that subscribe button. We're trying to get to 100 subscribers by the end of the year. It'll really help out the channel. And again, it's totally free. And don't forget to hit that thumbs up button and the bell notification. Thanks again for watching the video. Hey guys, hope all is well. Happy July 4th. Today I'm going to compare the Vanguard Total Stock Market EFT VTI with the Schwab US Dividend Equity EFT SCHD. My financial planner wanted me to diversify some, so I'm putting in about $100 a week into the Vanguard Total Stock Market EFT VTI. Let's see which one I think is best. Let's look at the numbers here. Guys, all this information is right off the Charles Schwab website. Remember, guys, talk with your financial planner and do your research before you make any investment decisions. These investments might be right for me and my wife, but not for you guys. So do your research. Let's take a quick look here and compare. The Schwab US Dividend EFT. The investment seeks to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Now we go over to the Vanguard Total Stock Market Index EFT. As you can look at the assets too. Wow, total assets for Schwab of almost $45 billion. The VTI Vanguard Total Stock Market Fund has $1.3 trillion. So it's a larger fund, and it's been around for about 22 years compared to Schwab, which has been around 12 years. VTI seeks to track the performance of the CRSP US Total Market Index that measures the investment return of the overall stock market. You guys could read the rest here. As we shoot over to the next slide, very important items here. Schwab has a net expense ratio of 0.06%. VTI comes in at about half, 0.03, which is good. The last close, this is as of 6:30, 72.01 for Schwab, which is up to 73 and change. And VTI is at $218.02 a share. The dividends, which I love here, I love my dividends. The yield on Schwab is 3.8 quarterly, and VTI is less than half of that, 1.57 quarterly. Both EFTs have no minimums. You just can't buy fractional shares in these stocks. As we shoot over to the growth of a $10,000 investment over 10 years, it looks like the S&P did better than both of these at one point. Then you have VTI coming in at 29.8. And SCHD just a little bit below that. It looks like 28.7. So no, it did about $1,000 more. It did in 10 years on a $10,000 investment. As we shoot over to 5 years, it looks like SCHD did about $1,000 more in 5 years compared to VTI. And VTI actually was below the S&P 500 benchmark. And you guys, the dividends and capital gains are reinvested to come up with this, as you could read on the bottom of this chart. After 1 year, we know SCHD isn't doing too hot this year. So they're down a little bit over $1,000 compared to VTI. And VTI is also, they're both underperforming the S&P benchmark. Let's take a quick look at the makeup of these EFTs. Schwab has total net assets of, like I said before, almost $55 billion, 104 holdings. The turnover is 14%. The median market cap, $93 billion. Percent of assets in top 10, 42%. Category average percentage assets in top 10, 30%. As we go down to the asset allocation for Schwab, it almost has everything in stocks. No bonds, no other. It says in 0.26, very little in cash. As we go to VTI, total assets 1.3 trillion. They have almost 4,000 different holdings. The turnover is low, which is great. That's why maybe the fees are less. It's 3% compared to Schwab has a 14% turnover. The market cap is 127 billion, it says here, median market cap. Percent of assets in top 10, 26%. Category average percentage, 50% in top 10. As we look at the makeup here, it's basically all stocks too. Some cash, very little cash, all in stocks. We go over to the top 10 holdings. SCHD, Broadcom, Verizon, Merck, UPS, Pepsi, Cisco, Home Depot, Texas Instruments, Coca-Cola, and Amgen. For VTI, you got Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, and Berkshire, Telsa, and United Health. As you can see, a lot of this is tech stocks. As we go over to the sector weightings for Schwab, communications, 5%, consumer discretionary, almost 9%, consumer staples, 13%, energy, 9%, financials, 15%, healthcare, about 16%, industrials, 18%, IT, 12%, materials, 3.2%, no real estate holdings, and very little utilities, less than 1%, less than 0.5%. As we go over to VTI, communication services, 8%, consumer discretionary, 10%, consumer staples, 6%, energy, 4%, financials, 13%, healthcare, 14%, industrials around 10%. Like I said, they're heavier in IT. They have about 27% in IT. Materials, a little less than 3%, about the same. They do have some real estate holdings, some investments, 3%, and about 3% in utilities. Guys, you know I love my dividends, so I'm going to pay a little more attention to this. The quarterly dividend, we just got one from Schwab for 66 cents a few days back, 3.8%, and a quarter yield. You know, I'm getting closer to retirement. We both are, me and my wife, 3 to 5 years. So we want to put a big emphasis on dividends. You know, we're trying to get at least to 20,000. We're getting close. We're almost at 14,000. So hopefully in the next few years we could get to our goal. As you look at the VTI distributions, they pay quarterly, but their percentage is a lot less. It's less than half, 1.57. As we go over to the analysts, what the analysts are saying. Morningstar rates these funds. They have a 5-star on Schwab and a 3-star on VTI. The categories, large value for Schwab and large blend for VTI. The 3-year rating is 4 stars for Schwab, 3 for VTI. VTI has a 3-star rating right down the list here. 5-year rating for Schwab is 5 stars, and 10-year rating for Schwab is 5 stars. The historic return high, above average for VTI. The risk is below average for SCHD and above average for VTI, which I guess is not good. It looks like Morningstar believes that SCHD is a better fund looking at the stars. I like them both, you know. It's a good way to diversify. I think they're both good funds. So again, I'm not a financial planner, guys. You talk with your financial planner and do your research, and you guys decide what's best for you. Thanks again for watching, and please hit that subscribe button. We're trying to get to 100 subscribers. Thanks again.